Okay, good morning students. We have seen so far two types of ratios. One is the liquidity ratio under which there are two types. One current ratio, other one is quick ratio. This is one. Number two, long-term solvency ratio. Long-term solvency ratio. There are three types under it. One is the debt to equity ratio. The second one is the proprietary ratio. The third one is the gearing ratio, the cost. The third one is capital gearing ratio. Capital gearing ratio. The second type we have seen. Now we are going to see the third type, the turnover ratios. The turnover ratios are of four types. Turnover ratios are of four types. This is turnover ratios. That what we are going to see, the first one. There are four types. The first one we are going to see inventory turnover ratio. And before that, what is this turnover ratio? Turnover means the collection. With the available facilities, with the available assets and liabilities, how much can be collected? What is the efficiency of the business? How much income can be generated? All these things are found out from this turnover ratio. So, income எப்படி உருவாக்க முடியும், generate பண்ண முடியும், how it can be improved or increased, எப்படி அதிகமாக்க முடியும், all these things can be found out through this turnover ratios. The first one is inventory turnover ratio. The first one, inventory turnover ratio. Inventory turnover ratio. This is the first type under turnover ratios. What is the formula to find the turnover ratio? Inventory turnover ratio is equal to inventory turnover ratio is equal to, as usual, there is a numerator and a denominator. Cost of revenue from operation. Cost of revenue from operation divided by average inventory This you should remember, the formula you should remember. Inventory turnover ratio. What do you mean by inventory? Inventory means stock. So what is the opening inventory? That is the stock in the beginning. What is the closing inventory? That is the stock at the end. For that we should find the average inventory, that is opening plus closing divided by 2 is average inventory. Then what about the numerator? For doing this we shall find the cost of revenue from operation, the numerator, revenue from operation. This what we are going to do, illustration 8. Illustration 8 it is. To find the cost of revenue from operation, we can go to the illustration number 8. What is given in illustration number 8? The particulars given are revenue from operations, inventory at the beginning of the year, inventory at the end of the year, purchases made during the year, carriage inwards. These are the 5 items given. For the numerator, how to find the numerator, cost of revenue from operation? What are the items does it contain? It contains opening inventory plus net purchase plus net purchase plus the carriage inwards, that is direct expenses, carriage inwards. This is direct expense. You are going to see this in final accounts at the end of this book. Direct expense, carriage inwards. By adding these 3, from the result you should minus the closing inventory. Closing inventory. This is the cost of revenue from operations. That is, generally we can take like this. What is the revenue from this business? Revenue means income. How we can calculate the income? Say for example, what is in the beginning? Say for example, 1,000. And we purchase some goods for 6,000 rupees. Stock 7,000. Then the expenses to bring it some 500 rupees. So the total amount spent is 7,500. But at the year end, 5,000 stock is available there. Therefore, how much excess we got? 2,500. This is the income from this business. ஆரம்பத்தில் எவ்வளவு ஸ்டாக் இருக்கு, எவ்வளவு பர்ச்சேஸ் பண்ணியிருக்கிறோம், அதுக்கப்புறம் எவ்வளவு செலவு பண்ணியிருக்கிறோம், இது எல்லாம் டோட்டல் அமௌண்ட் ஸ்பெண்ட், that is 7,500. Then at the year end we can find the stock only for 5,000. Closing inventory means closing stock. So how much is missing? 2,500. And this 2,500 is the income, is the revenue. The same thing is given as a formula here. Now you can substitute the values of it. Inventory, that is opening, Opening inventory is 40,000 plus net purchase made during the year 90,000 plus carriage inwards 10,000 minus closing inventory, that is inventory at the end of the year 20,000. So what is this? 1,30,000, 1,40,000. If you minus 20,000, you will get 1,20,000. 1,40,000 minus 20,000, 1,20,000. Then the denominator, what is that? Average inventory. For that what we should do? The opening inventory plus closing inventory plus closing inventory whole divided by 2. What is opening inventory? It is given there 40,000 plus closing inventory 20,000 divided by 2,000, that is 60 by 2, 30,000. This I told you, cost of revenue, that is the value of revenue or the amount of revenue got in the business. For that what we must do? We should take the opening stock, we should add the purchase, and we should add the expense, carriage inwards. This is the total amount spent, or this should be the value from this. What is the stock available at the end? It is only 5,000, and therefore the balance amount should be the income what we got. That is revenue we avail. That is 2,500. So average, you should remember, whenever we find the average, when there are 2 items, add the 2 items divided by 2. Divide it by 2. When there are 3 items, add the 3 items and divide it by 3. When there are 4 items, add the 4 items and divide it by 4. That is the average. And when there is only 1 item, no question of finding average, the same amount. Or else you can use the same formula, that 1 item divided by 1. So average means the number of items added by the items added by number of items added. So opening inventory and the closing inventory, there are 2 items added and it must be divided by 2. So 60,000 by 2, 30,000. Now we have got the answers for numerator and the denominator. Numerator 1,20,000 and denominator 30,000. So we can divide and write this is 4 times. 4 3s are 12. You can find a major or main difference in writing the answer. In the first 2 ratios, of course, liquidity ratio and the long-term solvency ratio, you can find the answers in terms of ratio, that is 1, 2 is to 1, 1 point is to 1, 0.5 is to 1. Like this you can write. For these 2, for 1 and 2, how you write the answer? 0.225 is to 1, 0.5 is to 1, 0.75 is to 1, 1.5 is to 1. 2 is to 1, 3 is to 1. You will write in the form of a ratio. But here you do the actual division and write the answer in times. This is one. This is one part of the question. What is actually asked? From the given information, calculate the inventory turnover ratio that we have calculated, that is 4 times, and inventory conversion period. Inventory conversion period. What is inventory conversion period? This is the second question. Inventory conversion period is equal to here the question is in months. So what we should write? Number of months in a year whole divided by inventory turnover ratio. Inventory turnover ratio. So number of months in a year, there are 12 months in a year. Turnover ratio is 4 times, therefore 12 by 4, this is 3 months. If it is in other form, that is, the same inventory conversion period can be given in terms of days. In that case, what we should write? Number of days in a year divided by inventory turnover ratio. That is, number of days in a year is 365. Here in this problem it is 4. Therefore 365 by 4 divide and you should write. That is the inventory conversion period. So what you have learned in this formula, the third type of method or type of ratios is called turnover ratios. Under this turnover ratio, the first type is inventory turnover ratio. For inventory turnover ratio, what is the formula? Cost of revenue from operation divided by average inventory. What we should do? Why I have written the formula here? Because we should prepare or we should find the answer for the numerator separately, for the denominator separately, then we can substitute the numerator answer here, denominator answer here. That's what I have written, numerator answer here, denominator answer here, and I have divided and written there, not in the form of ratio, times actual division. Sadharana division panni, what I have written there, times I have written. We should remember this is an important point. Then what about the numerator? What is cost of revenue from operation? Cost of revenue from operation means opening inventory, purchases and carriage inwards, otherwise direct expenses. These three should be added together and the closing inventory should be minused. And this answer gives the cost of revenue from operation. That is the revenue collected from operation that we can find. That is numerator. We have written. What about the denominator? Average inventory. Just now I said, when you find a term average, what you should do? When there are two terms for average, add the two items and divide it by 2. When there are 3 items, add the 3 items and divide it by 3. Here only there are 2 items regarding inventory. Therefore, add those 2 items and divide it by 2. That is opening inventory plus closing inventory divided by 2. 40,000, 20,000 divided by 2, 30,000. So I have written the value for denominator, divided and written 4 times. And there is one more subdivision under this problem. What is that one more subdivision? That one more subdivision is inventory conversion period. What is the formula for it? If the question is, what is the question here? And inventory conversion period in months, it is given. If it is in months, number of months in a year. If it is in days, number of days in a year, divided by inventory turnover ratio. The denominator is the same. Numerator, if it is for months, number of months in a year. If it is for days, number of days in a year. If it is number of months in a year means 12. If it is in days, number of days in a year, 365. Inventory turnover ratio, that's what we have found out. Only with this tail part can be asked. This cannot be asked straight away. If at all, if it is asked, then the inventory turnover ratio must have been given. The inventory turnover ratio, then you can find straight away this answer. Okay, now we shall continue the same for exercise problem also. Problem 8. Exercise problem 8. What is given in problem 8? From the given information, calculate the inventory turnover ratio and the inventory conversion period. That is inventory turnover ratio and the inventory conversion period. For this, the numerator is cost of revenue from operation. How to find the cost of revenue from operation? You take the opening inventory, add the purchase, add the carriage inwards. These three items you add. From that addition, from the total, you minus the closing inventory. This is the formula what we have written. Now for this, substitute the values. 1,70,000 plus net purchase, that is purchases made during the year, 6,90,000 plus carriage inwards 20,000 minus closing inventory, that is inventory at the end of the year, 1,30,000 1,30,000. This is equal to 760, 860, then minus, 760, 860, 880, then minus 130, 1,30,000. It is 7,50,000. Then denominator, opening inventory plus closing inventory by 2. Opening inventory 1,70,000 plus closing inventory 1,30,000, that is inventory at the end of the year, whole divided by 2. This is 3 lakhs divided by 2, 1,50,000. Now we have got the answer for both numerator and the denominator. Write it. Numerator value 7,50,000 whole divided by denominator value 1,50,000. This is equal to, if you simplify, all the 4 zeros are cancelled, 5 15s are 75, therefore 5 times. I said for turnover ratios should be written in terms of times. You do the actual division and do it. And the next one, and inventory conversion period in months. Inventory conversion period in months, then number of months in a year divided by inventory turnover ratio. If the inventory conversion period is asked to find in terms of days, then number of days in a year divided by inventory turnover ratio. Here it is asked to find only number of days in a year, therefore number of months in a year, therefore number of months 12, inventory turnover ratio 5, you divide this 12 by 5, 12 by 5, which is equal to 2 5s are 10, remainder 2 20, put the point 4, therefore 2.4 months. This is the inventory conversion period. So what we have done in illustration 8 is repeated in exercise problem 8 also. So under this category, turnover ratio, the first ratio is inventory turnover ratio. For inventory turnover ratio, this is the formula. Cost of revenue from operations, how we should find opening inventory, add purchase, add carriage inwards, adding these three from the total you minus closing inventory, you can find the revenue from operations. And the denominator, average inventory. Average means for 2 items, add those 2 items and divide it by 2. So opening inventory plus closing inventory by 2. So this is 3 lakhs by 2, 1,50,000. So numerator value 7,50,000, denominator value 1,50,000. Divide it, you will get 5 times. So come to the next question, inventory conversion period. If it is for months, number of months. If it is for days, number of days in a year. So number of months 12, inventory turnover ratio it is 5. If it is number of days, 365 by 5. You can divide and write the answer in terms of days. That's all.